following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Don't make assumptions. Let your life be transformed. When you stop making assumptions, your word becomes impeccable, and your life is completely transformed. Magic just happens in your life. What you need comes to you easily because the Spirit moves freely through you. Market-wise, let's take a look at it out here. We have the Dow Industrials down 1, down 3, NASDAQ down 38, S&P's down 7, gold contract down $4.20 at $12.64. That's after being up $10. Silver up 18 cents, $16.53. Platinum up $13, $9.39. Copper down 3 pennies, $2.56 a pound. Light sweet crude crushed down $1.66, trading at $44.80 a barrel. Notes. This is pretty amazing. 10-year note, folks, up 14 ticks, 127.01. 30-year bond up 1.5 points, 156.29. Bottom line, that 30-year now wants to get up to 159. And this is after the Fed came out with this statement, folks. Bottom line, they rose short-term rates. They're going to start bringing down their balance sheet. Guess what? Didn't matter in the note or the bond market. King dollar, it mattered in the king dollar. King dollar was down 500 ticks. Right now, it rejected lower price. But guess what? It has high volume, so you're going to be back down there. But it did reject lower price. Right now, you have 28 ticks. You're trading at 96.960. The euro is trading at 112 to the U.S. dollar. The yen is at 109.68 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. What do you have? We get over and we take a look at the SPY. What you're going to see in the SPY, folks, is that you got to a price point up here. You hit a new high, I believe. Let's see. We test the high. We got to 244.87. It was testing the high of the downdraft of last Friday. We had volume today of 49 million. You're going into 132 million. Bottom line, this wants to go back down into that high volume low, which is 241.95. I expect what you're going to see, as we did in the NQs and the NDX one, the ND composite. This thing wants to reach into the trading day of May 17th and 18th, and that would get you down to 235 to 2 inside the SPY. Dow Industrials. Dow Industrials reached another high out here today. Dow Industrials got to 21,379. Right now, you're only down $20. No big deal. The composite. We take a look at the composite, NASDAQ composite. Composite came down hard, fast, all of the above. We reached up to the 62.37 today. Right now, you're at 61.65. And bottom line, we very well could have an ABC structure on the way down. This is going to be a nasty little deal here. We'll see how we end up hitting the B point of this potential ABC structure on the way down. That B point is 61.10. So we came down with big volume. You bounced yesterday with light volume. You're coming back down. We're going to go after that B point, which is 61.10. If we take a look at the 3 Qs, you do this correlation inside the 3Qs. 3Qs, we had come down with 109 million shares on Friday and Monday. You bounced higher yesterday with 51 million. Today we're going to do around the same thing. So you get a higher high, light volume. Now it's going to go barreling after the swing low, which is 137.47. And inside the NDX 100, it's pretty clean that it wants to go after the May 18th swing low, which is 135.87. Gold contract. What do we have with gold? They smacked gold contract. They smacked it around. Here we go. So gold gets to a price point today of $12.8420. We've done 303,000 contracts. Now, when you get the higher price, you give it up in price, but you have the volume, you get right back topside. So this is going to be really cool watching how this shakes out, folks, because gold's given up all its gain. You went to $12.84. Right now you're down $2.40. If we go over and we take a look at the silver market, you're going to see the same type of setup inside the silver market. Silver market is still up 1%. Silver market got to a price point today of $17.40. You're at $17.02 right now. You've done contract volume out here of, it's only 12,000 contracts. Bottom line, see, interesting. So silver needs more. Gold doesn't need more. Silver does need more. Now, let's go over to the GDX, because what you have with the GDX is this. This thing's getting crushed too. That being said, what this is, and this is where it's going to be interesting watching this, how this shakes out. So what we did inside the GDX is that we broke out last Friday, and we broke out on the 6th. We go topside. We do 97 million shares. We back down. You rejected lower price. Yes, there you go higher. What this could be out here is a last engulfing. And what a last engulfing is, and this is where it's tricky, a last engulfing can only happen after you have been going down. And we've been going down 5 days. And what a last engulfing does is this, is that you start higher, you finish lower, and then the following day, you go higher once again. You know, what we do have inside the GDX is that you have volume pushing into that swing. So we'll see where that baby shakes out. Bonds. Bond market, pretty amazing. The 10-year note, up 16 ticks. We have done 2.1 million contracts. This is intense. Man, they don't care what Janet Yellen's saying. Yeah, we've done 2.1 million contracts. So you get a larger ABC structure on the way up. Your A point on this is 124.12. Your B is 126.29. So let's say about $2.50. So that's that price projection is 128.17, and we're at 126.28. You're yielding right now on the 10-year 2.1%. That'll bring it under 2% if, in fact, you get that full price projection. The 30-year is pretty amazing. 30-year, you're at 155.15. You're up $1.50. You stay right there. We'll finish this as soon as we come back. Our phone number is 877-927-6648. Dow's down 24. Nasdaq's down 66. S&Ps are off 11. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Let's go over to, we'll finish up with the 30-year bond first, and then we'll go to the King Dollar. So 30-year bond, folks, we've done 444,000 contracts, blown away the swing point. Your A point on this is 149. Your B point is 155.5. Bottom line, you get $6.50, which is going to bring you pretty amazing. You're talking a $1.60 inside the 30-year. And if we do go take a look at this, what you're going to see is that this is where we started down from on election night. So I believe it's a $1.65 actually. Let's see what it is. $1.64. Yeah, it's a $1.65. $1.64.31. 32 ticks in a. So bottom line, we're going to go right into that monster bar, because that monster bar, that's when bonds went from 164 to 155. Bottom line, no matter what Janet Yellen's doing, they are basically buying bonds hand over fist. Now, let's go to King Dollar. King Dollar. Okay, so what do we have out here? King Dollar trades down to a price point today of 96.305. Moves up to 97.005. You've done 52,000 contracts. So what you've done is that you have rejected lower price. The lower prices on this is 96.465. But guess what? Volume's way too high. So this little baby will go right after it again. Now, what's going to be intriguing in King Dollar is this, folks, is that where we are right now, this is a really sweet hammer, okay? So the way hammers work, okay, is that the longer that you've had a downdraft and the larger that the hammer is, the more powerful, well, the theory is, okay? So technical analysis is all theory, of course, but the theory is that that will be a much stronger signal. So this is a very strong signal that the dollar should get a heck of a bounce. Now, that being said, what I expect we're going to see here, now this is going to be really wild watching this shake out. We can go from a hammer to a doji in the middle of this move without a lot of movement, which is going to be pretty wild. So we'll see, if we close at this level here, bottom line, that's a nice hammer. that'll be saying you're going to get a good bounce. If we close at even 100 ticks down, different ball game, because then you're setting up a doji down at those levels. We take a look at the Dow Industrials, the strength versus weakness inside the Dow. What we have out here is that the strength inside the Dow out here today is Home Depot is up, is putting 14 positive points. Travelers is putting 12. United Health is putting 7. Taken away from it, Apple's the culprit. Apple's, and well, the Dow's only down 2 points, by the way, too, folks. Apple right now is down, is putting 17 negative points. Chevron is putting 12 negative points. You have Caterpillar putting 8 negative points. IBM is putting 7. Inside the NDX 100, you have the leader is Alexa Pharmaceuticals up 8%. BioMolin is up 1.6. Taken away from it, Biogen is down 3.6. Clack is off 3.4. Western Digital is down 3.2, and Skyworks is down 3.1. Let's go to Kevin in California. Hey, Kevin, what's going on?
Hey, Tom. How are you doing?
I'm doing great, man. Yourself?
I'm doing pretty well, with the exception of the gold getting smacked around today. I just had a quick question about the mining shares and what it's going to take for those guys to get some love.
Yeah, seriously. So the GDX, and that's what I started when I did the update. Yeah, it's getting killed. You know, we've gone from 23.42 down to 22.23, and you know we'll see whether they catch any type of bid as we come into the close. If we go take a look at ABX. So ABX, and this is important for the GDX. So ABX, your swing point is 1586. We haven't got there yet. Let's take a look at Newmont. What I'm looking for, I want to see if any of these have actually broken a swing yet with volume. And you haven't. Like if I look at Royal Gold, you know, this is a tough day. There's no doubt. It's a fast sell down, but I still like the setup. You know, like if you look at Royal Gold right here, so watch this, folks. This is Royal Gold's down almost $3 from its high today. You're seeing 194, but it had already been up a buck. But you're still coming right into the support from the 11th. You know, so.
Yeah, I mean, taken as a whole, I mean, just looking at like, for example, the XAU or HUI, I mean, a number of the stocks, and I kept worrying about this all through the spring.
Yeah.
A number of those stocks still have a gap sitting open on December 23rd. There's another one from December 28th that a number of them have filled. I thought maybe that would be sufficient to get the indexes to pop back up after those got filled. But that niggling little gap in a lot of the mining shares on December 23rd.
I see it. Yeah, I got it right
here. It looks like we could be heading for that. And there's, this kind of reverse cup and handle that we got going on a lot of the shares, the smaller ones, admittedly, but a lot of the shares.
Yeah, listen. I'm cognizant of what you're saying. I got it up right now. I don't see us heading there. The benchmark you want to keep your eye on. See where that March 15th deal? That's, I got the XAU up right now, folks. And so the high of that benchmark would be 83, the low is 77.97. That's a decent benchmark. But listen, I hear you loud and clear. I mean,
one thing, that some of the shares do have going for them is there's there's some pretty strong charts out there still. I mean, if you look at like Franco-Nevada and Agnico Eagle and Royal Gold, there are a few, in that crew that still look really pretty strong. In fact, they had a nice little cross of the 50 and the 200 day, and most of them are of the ones that I'd mentioned are still above that. Let me see which one it was here that I was looking at earlier.
We do need a rejection at a lower price, though. And, what you're hearing here, folks, okay, is, Kevin's been in the gold market a while. I've been in it a while. This happens. That's the bottom line. So the real question is going to be, is it a total train wreck? We'll find out. I'm right. I mean, we know how this can go, man. You know what I mean?
I know, and that's my concern here is that especially with the power that we've seen, the downtrend in the dollar, and especially too with kind of oil falling off a cliff. You'd expect that the combination of those two things really would have benefited the miners, unless what they were sniffing out was a plunge in the gold price, because a lot of these companies really have gotten their act together after they did some pretty stupid financial things, back during the last run up, and then they've got a lot going for them, and it's just hard to imagine not doing better than they are here.
I think the biggest thing we have going for us in the metals market is that it's still easy monetary policy, and the bonds are still saying, guess what, man? It's funny money, and it's out here.
Yeah, no, but it doesn't matter until it matters.
Stay right there. Stay right there. We're coming right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are up 16. You get the NASDAQ down 47. S&Ps are off 6.5. We're talking with Kevin from California. We are talking the metal equities out here.
Yeah. You'd said earlier, in an earlier segment today, that you thought there was a possibility of some of these stocks doing a last engulfing.
It's a last engulfing, yes.
My understanding about last engulfings like that is you have to be in a downtrend for a reasonable amount of time, not just like 5 days, for that really to have a high percentage chance of working. Isn't that your take, too?
No.
No?
No. Well, it would be my take, but we've been in a downtrend now for, it just depends on how you want to look at it. We put this up, I mean, we've been in a downtrend since the high of February of 07.
Oh,
I mean, 17.
I meant on some of these equities that had like a 5-day key reversal today.
Yeah, no, I look at it that, what has happened, it seems, and this is where it gets kind of weird, folks, okay? I actually like this setup, and the reason I like it, it's not that I like it, okay? I don't like losing money, that's for sure. What I like about it, this whole trade has been so hard this year. Last year was a field day, okay? The beginning of this year was a field day, okay? But this is what seems to happen inside this market. And it hasn't been easy, the whole year. So when I look at this, it's like, okay, man, each and every time we're coming up to these levels, it doesn't have it. And, my take is on when you're going into swings and you have volume, which we have again today, that's going to go right back up there. So.
Yeah. Well, yeah. I mean, and one of the things actually we have going for it is some of this downside volume. If you compare the days, it's fairly low volume on the downside relative to some of the swings that these equities are testing back from May. So that's a good thing. I hope it just doesn't I hope it doesn't just decide to jump off the cliff tomorrow beneath these previous swing lows from May, because that's how a lot of the charts are set up. It's right.
Yeah,
back.
Listen, man, we've looked over a cliff not a million times, plenty of times though. There's no doubt about that.
This one just has me vexed because of just what I was saying actually before you went on break, where you've got energy coming down, you've got fairly strong balance.
Well, energy's a different deal, man. We get oil coming out the yin yang. Okay, to me, oil. I think oil's done. I don't. Yeah,
No, I just meant that the greatest cost for most mining companies is energy. It's very energy intensive.
Right.
Business.
But you got to remember something.
So with oil coming down, I just would have thought that in combination with some of the stronger balance sheets that they have now, and the dollar having been in a one-way trade down, those three things really would have benefited the mining shares. It's really counterintuitive to me that just absolutely nothing has worked so far.
Right. So watch this, though, that the gold sector is very small. And what ends up happening is that, large operators can move it around, and they do move it around. Banks can't stand gold. I mean, you know that, right? Yeah. So, it's not a normal occurrence, but, it's a trade. That's what it comes down to. And, I mean, it's not, I don't even know who they are when I say that, but I can tell you that, if you were an operator, you can move this stuff around pretty good.
Yeah.
My take is that the dollar still is going to 91.
Yeah.
And gold's going to probably, blow away 1,300, like, in a big way. So.
Yeah, I'm with you. It's just a question.
Oh no, listen. I know.
Of when those ABC structures, that play themselves out. I mean, yeah, I know we've got some highs out there that look like they're going to be retested. It's just, what you're hearing is my frustration more than anything else.
Listen, man, I know. Believe me, I know. And I even try to catch myself even as we're speaking, because it's like, I get a freaking nerve in another way. Do you know what I mean? It's like, hey, we're down good, man. Do you know what I mean? It's like, okay.
I know.
So.
I know. Well, the funny thing is, I mean, this is oftentimes in the gold market, and I have to remind myself of this. When it looks darkest, when it turns around, we absolutely have a huge gap up day, and it takes off, and it goes and goes and goes, and doesn't stop for a good long time.
Okay, so watch this, folks. What you just heard there. See, now this is where this gets really wild. Is that those runs, okay, that Kevin is talking about, are not only real, but what also ends up happening is that when you trade gold for so long like we have, with the frustration you hear what Kevin and I are talking back and forth, is that each and every time that we've come up to these swing points now, what has happened is that hasn't kept running and running, and we're both waiting for that to happen. So I know exactly what you're saying. It's like, okay, are we going to make it this time? Is this the run? You know what I mean? So I know.
I know. It's crazy.
Yeah.
Well, look, I won't take up any more of your time here, but I just want to get your take on that, and I appreciate
it, man. Have a great one. Have a safe one.
Okay, take care.
Let's go to our man Tom in Plymouth. Hey, Tom, what's going on?
Hey, Tom, they're real and spectacular. I think this is a great buying opportunity.
Well, there you go. And what we're talking about here, folks, okay, so Tom loves trading the Nugget and the J-Nug. So the Nugget, folks, is the direction 3 times bull position of the New York Arca Index, and that happens to be down $3.69. And you talk about wide price spread out here today. We've gone from $36.62 to $30.61, folks. You're talking about $6,000 per 1,000 shares.
I sent an email to Steve Rhodes yesterday saying, yeah, I think I'm going to exit and just see what happens. He said, you know what? That's probably a fantastic idea, and I am so glad I did. I'm glad I wasn't in it, and I'm all over it right now.
That's a beautiful thing. Hey?
Yeah.
We got, let's see, what do we got? Oh, we got plenty of time even before the close. This is kind of interesting watching this close. I want to see how this close shakes out, man. So.
Yeah, I think it could move a little bit back to the upside, and then I'm glad it's not tomorrow's not Friday. That's for sure. But, yeah, they might have a different take on that. But
well, you know, the thing I'd really watch closely out here too. It's going to be about this dollar, folks. Okay. You know, the dollar got a heck of a bid. But if this dollar, right now we're at 96.975, this dollar only has to get back to like 96.700, you know, and then that's not even a hammer. So that's pretty intense. And that'll just say that they're going to sell the dollar again.
This yen dollar, didn't it have to break below 109.33?
The yen?
Today? Well, yeah.
Well, that's... I get 108.13 is the low, but 109.12 is the other one. Yeah, the yen hasn't, you know, the yen's not even a hammer. You know, the way the yen's trading right now, it's not a hammer because it's the top of it's not twice the length of it. You know, so the yen still wants to get stronger. And if we go over to the Nikkei, watch this, folks. Okay, this is where this gets interesting. So the Nikkei last night. That came down $15, which is nothing, but it's getting closer and closer to the lower range, which is 19,668. And you know.
Well, I would think that that Nikkei will come down tonight. No.
If we close, you know, the S&P is only down 5 now. Yeah, stay right there, Tom.
All right.
Stay right there, folks. We'll come right back. Dow Industrials right now are up 31. Nasdaq is down 40. S&Ps are up 5.5. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now up 35. You get the NASDAQ down 37. We have gold down to $7 after being up 10. We're talking about our man Tom from Plymouth. And we're talking about the Nugget and the J-Nug. And I'm sure he's already made some money on that baby. This close is going to be pretty cool watching this close come in, man. You know.
Yeah, I think you're going to keep that tight stop in there though for tomorrow. But
well, you're going to make your money on the gap up tomorrow. That's. I mean, we know how this works. What I mean by that, Tom, if it gaps down, the stop's not going to help you, right? I mean, that's the reality.
Right.
So, yeah. Stops are good, folks. I'm not saying that. It's just that we trade this nugget a lot. So,
right. If it goes down any further, it'll be below the stop, but at least it'll be, I don't want it to go too far, you know?
Yeah. As you're going to bed tonight, I know they're going to be rolling around in your head saying, how am I going to, when I wake up, where's it going to be, baby? The first we should make a film, folks, of the amount of folks across the U.S. that probably listen and do the exact same thing every morning, because it would be pretty good.
Yes, it is. All right, well, hey.
Okay, man.
We'll see what happens.
Have a great one, man. Have a safe one.
You too.
Yeah, I love it. The Nugget Dreamer every night. Nugget, and I've been dreaming about the Nugget, I think, for so many years right now. It's crazy, folks. Bottom line, you know what it comes down to? Well, what has happened, like last year, it was the Nugget and the dust. When I actually look at my portfolio, at the end of the year, and you look at it, it's kind of nice how TD Ameritrade breaks it down. You see everything, profit losses in both of them. So it's a two-way trade. That's how this thing shakes out. So we'll see how this comes into the close out here today. Right now, there she's good. Look at that. That little dollar's going to start cooperating. Let's see what she's got out here. So DXM, this is going to be crazy if the dollar actually does give up just a bit more. Hasn't given up enough yet, but there's no reason it can't give up. Give up about 300 ticks and it would be pretty good. Let's go take a look at the volume out here today. So inside the NYSE, right now you're at 587 million. So you're going to have a higher high inside the NYSE. You're going to have lighter volume. That's a good indication that it wants lower price. Inside the NASDAQ Composite, we're going to have about 2 billion shares. If we go take a look at the Qs, what you're going to see with the Qs out here, they are down 53 million shares. We did 51 yesterday. The Qs will end up doing, do about 70 million probably. Now, excuse me, folks, your B point of a potential ABC down has 104 million shares. So that is going to be hard to do. Now, that won't be as hard to do coming Friday. Friday's normally really slow in the summer, but you are going to have a weekly expiration. That'll help it out somewhat. If we close right where we're at right now, that brings the probability much higher that you would go to the bottom of it. We're at 139.44. It would have to reject 139.48. If it does that, then the Qs have a chance to basically make a bounce out here tomorrow. Some of the high volume stocks in this market right now, you have Bank of America as the leader. That's down 4 cents. You get Advanced Micro off 22. Nvidia's down 45. Apple's down $1.90. You have U.S. Steel down $1.20. Transocean's down 49. Let's go to Apple and take a look at Apple because Apple looks like a dead duck. Yeah, so Apple's going to go after the B.2. So, Apple came off its high of $155. We're at 144. You're right into the bar from Monday. The top of that bar is 146.09. The bottom of that bar is 142.52. So it's going to be intriguing. And it's not that the Fed, the thing that's has some divergence out here would be this, folks, is that the Fed, bottom line, said that they very well could go up again, okay, short-term basis. The bond market is flat out saying, and so here, watch what happens here too. The short-term interest rate does not affect you and I. The short-term interest rates, that's when banks normally do make more money. But the banking structure, that's down too. The XLF is up 1 penny, okay? Bottom line is that what the market is projecting out here is that the 2% inflation number is not flying. And if the 2% inflation number is not flying, they're not going to be able to go up on rates. They're going to have to stop in their tracks again. And I can tell you something. If the Fed stops in its tracks again, that they can't go up on rates, people are going to look around and say, what's wrong? Okay? Because the bottom line is that, why can't we grow more than 2%? You want to hear something really bizarre, though? This just came across the tape. This really blows my mind, this thing. I'm going to go from there to, if you just want to see hypocrisy in government, this is like a mind blower. And, okay, so, and the last week, okay, Andy and I were talking about it, talking about the Middle East. You got the Saudis, you got Iran, you got Qatar, right? So Qatar, they isolated Qatar. Trump comes on, says, yeah, they're supporting terrorism, right? Well, guess what? This is like crazy. This blows my mind, actually. We are going to sign an agreement with Qatar on Wednesday, and we're going to sell them 36 F-15 jets. Yeah, you heard that right, folks. This is like a mind blower. Okay, so here, check this out. Qatar will sign a deal to buy up to 36 F-15 jets from the U.S., even as the political crisis in the Gulf leaves the Middle East nation isolated by its neighbors and criticized by Trump for supporting terrorism. Qatar's defense minister is going to meet with the Pentagon chief, Jim Mathias, on Wednesday and seal the agreement. Bottom line, folks, you can see, guess what? It's like, it's so far over the top, it's insane. It's like, okay, so where does the truth lie in between all that? You say that, okay, they're supporting terrorism, so now we're going to sell them, how many F-15s? I got to see this for a second, because this is just crazy. It's like, okay, yeah, 36 F-15s. Yeah, 36 F-15s, okay? You know what? Well, yeah, it might be old technology. I'll take some of that old technology. That'd be like taking an M16. Take that old technology. I'll take it every day. I'm just answering one of the tigers in the den. Our phone number is 877-927-6648. Let's go take a look at some of these stocks inside the GDX. Okay, so the largest weighting structure is Barrick. So the swing point on Barrick is 1586, and we're teetering right at it, and it's coming into it with volume. So bottom line, we want to see that hold. 1552, interesting. So the 29th of December, and this is interesting what Kevin was saying too, because he was saying that there's a gaps that are opened, and that's a little gap at 1530. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. You got the Dow up 40. NASDAQ is down 31. S&Ps are off 350. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow right now is up 50. Let's go look at the Dow. It looks like the Dow is going to close at an all-time high. Yep, sure is. 21,382. It's at a high, man. And inside that Dow, so let's see what's putting the strength into it. Home Depot. Home Depot is putting 19 positive points. Goldman is putting 16 positive points. Travels is putting 13. United Health 9. Boeing 9. 3M 6. So if we go take a look at Home Depot first, Home Depot is up 286. That's going with wide price spread. Let's go to Goldman. We take a look at Goldman. Now this is just the opposite. So check this out. This is pretty cool, folks. Goldman is a last engulfing on the way up. And what that is that, you know, you've been going up, you open lower, you close higher. So this will be interesting watching this shake out, man. How this is. So Goldman's coming into its downdraft that had 5.6 million shares. You've done 3.2. Let's go over to the XLF. The XLF has done the same thing. So this is going to be cool watching how this shakes out. The XLF, you'd like to see the XLF actually get up to 24.55. You've hit 24.54 thus far. The way it's pretty good. That's the last engulfing on the way up. Well, it very well could be. The XLF is coming into 192 million shares. And right now you got 108 million shares. Let's go take a look at the small caps. Small caps out here. They came off the highs. They're back in the lower range. We're down 96 cents. 141.12. 141.81 gets you back in the lower range. And we'll see. Let's see. So we're talking. Oh, this is going to get really interesting. So what the small caps did too. Let me see this for a second. The small caps actually got lower than they did last Friday. Yeah, they did. So we'll see whether we get back down there. But the small caps actually got lower than they did last Friday, which is a big deal. The NDX 100, that baby is having a hard time catching a bid. NDX 100 looks to me like we're going to more than likely go after these swing lows Thursday and Friday. See, now what does get interesting here is that you have the high volatility in the market. You get a lot of movement in the market. The bonds are still projecting that the market wants lower price. This is some heavy divergence inside this bond market. And these are nice breaks topside, meaning that we already had broken topside in the bond market. It pulled back with lighter volume, then broke out again. And if you take a look at the TLT just blew away its swing point with volume. TLT, your rate point on this is 119.91. Let's call it 120. Your B is 126. So you're dealing with 129. And right now we're at 126.30. So that's projecting too that, guess what? And if we go to the, HG, no, G, I think it's the HGX, the housing, so the Philadelphia housing index, that broke out yesterday, went to a higher high today, and that's the same with the Home Depot. This thing broke topside once again, and that's, what that's all about. That's all about inexpensive money, because no one buys houses with cash. We do, but the reality is you don't, okay? It's all a signature, and it's saying that rates are going to stay low. And right now, we're at 2.136. We'll be at 2 by Friday. You stay right there, folks. We'll be coming back with some numbers. Dow Industrials up 42, NASDAQ down 29, S&P's off 3.5. We're going to be right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you?
I'm doing great. How you been, man?
Not bad. You know, you guys, over the time and with a few of your courses and seminars, you taught me how to fish.
That's a beautiful thing, brother.
Yeah, it's true. And so what happens is I still listen all the time, and to not only you, but some of the others.
Sure.
To, get an idea where the fish might be biting. As far as your services, they're a bargain. When you compare them to a certain prominent man with real estate courses at $35,000 and no contact with the lecturers afterwards at all, and you think of what you guys do for a few hundred, and you can get access and ask questions forever, it's a great deal.
No, we appreciate the growling problem with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We have 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Release the need to be right. When you believe something, you assume you're right. You may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. Dow Industrials new high, up 46 bucks, 21,374. NASDAQ down 25 bucks, S&P's off 2. Gold contract down $6.20, trading at 12.62. That's after gold was up 10, 12 bucks, folks. Bottom line, gave it up when the Fed come out. Said that, they're going to basically may go up one more time. Bottom line, we'll see how this whole thing shakes out. Silver stayed up. Not as much as it was. Silver's up 11 cents, $16.88 an ounce. Platinum up $9.42 at $9.35 an ounce. Copper down 3 pennies, $2.56 a pound. Light sweet crude. We got plenty of oil, folks. Bottom line, that got crushed also. Down $1.73, $44.73 a barrel. Notes. 10-year note up 16 ticks, 127.04. 30-year bond up 1.5 points, 156.29, 28 rather. Both notes and bonds, folks, continued higher. Wide price spread, accelerated volume. They're both in ABC structures on the way up. And you're talking about a 160 in the 30-year. You're talking about a 128.5 on the 10-year. That is going to bring the 10-year, if we get that price projection, down under 2%. Pretty wild in the face of the Fed going up on short-term rates. Right now, the 10-year, folks, is at 2.131. Now, that 2.131 is, let's see, yeah, that is the low of the last 6 months. Right, this closing number right here, this is pretty amazing, is the low of the last 6 months. When we go and we take a look at the year, we are smack in the middle of it. The low for the year has been 1.3. The high is 2.6. So pretty wild that the Fed goes up on rates, and guess what? Bottom line, market wants higher price, lower rates. King dollar. What do we have a king dollar? King dollar down 37 ticks, 96.905. The euro's trading 112 to the U.S. dollar. The yen is at 109.65 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You get a sideways market out here. You did 73 million shares. You're at 244. You did get up into the high. We missed it by a penny. The high of last Friday was 245.01. You hit 244. No, you missed it by more than that. We missed it by 14 pennies. We hit 244.87. So that's a test of it. Couldn't handle it. Yeah, we'll see whether it's going to try to now. The high of last Friday also has a high volume low, folks. That's where I expect we're going to go, which is 241.95. Dow Industrials closed at another new all-time high. So that baby can say it can go higher. The composite, the NDX, the composite first. Composite comes down $25. You're at 61.94. This very well could be an ABC structure on the way down. We'll see how it, I suspect, number one, we have a high volume low at 61.10 from leftover from Monday. Bottom line, it's going to go test it. You break that with volume, you get an ABC structure on the way down. And this would be a pretty decent one. 63.41 to 61.10. Yeah, 63. So you get what? $240, and 240 would get you down to the 6,000 level. And the 6,000, yeah, there she is. See, the 6,000 level, that's where it wants to go. And the 6,000 level, 59.96 is the high volume swing low from the 18th of May. That's where this baby wants to go. The NDX 100, the 3 Qs, that's going to be the same type of setup. 3 Qs, we're at 139.75. This thing wants to trade down to 136.05. Gold contract. What do we have with gold? Gold contract traded up to a high today of 12.84. Gave it up in spades. We're at 12.61. That being said, you pushed into the higher swing and you had volume behind the move. So this is going to be intriguing. Watch this shakeout, meaning Thursday and Friday, because it was quite a move. You know, we got to the 12.84. You can make a couple different cases here. You can say, okay, well, we push in the high, or in fact, you just give it up and you push in the low. So we're going to learn soon enough, that's for sure. We take a look at the silver market. Silver is still weaker than gold, even though with silver held a positive, it was up 0.6%. Intraday, it had it going for it. That being said, it just doesn't have the volume behind the move. Silver had 16,000 contracts. You'd like to see a lot more than 16,000 contracts. The note and bond market, bottom line, if you happen to be in the metals market, are still saying that, guess what? We have lower rates coming at us. Lower rates are great for the metals market. Bottom line, took out B points, took them out with volume, all of the above. The A point in the 10-year is at 124.5. The B is up at almost 127. You know, so you get $3.50. You're talking about a 130. You're talking about approximately a 130 in the 10-year. That's your ABC structure. In the 30-year, you're talking about a 160. I like that. It's two numbers we can understand, and you can remember them pretty easy. Now, King Dollar. What do we have with King Dollar? King Dollar gets down to a price point today of 96.305. It rejects that price, but guess what, folks? Way too much volume. 56,000 contracts. So King Dollar, I suspect, is going to retest this low. And it gave up slightly into the close. This is still a decent hammer. You know, we'll see how it handles a counter trend bounce. You know, and I suspect that is going to be tomorrow, meaning tonight going into tomorrow. You stay right there, folks. We'll be coming right back. Dow Industrials closed up 46, NASDAQ down 25, S&P's down 3. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continue to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Let's get over and we take a look at how the Fed is looking at where they're going to go this year. So Federal Reserve officials basically, they went up 25 basis points, and a lot of the conversation was about the aspect of inflation, folks, because the inflation number came in really weak. Policymakers agreed to raise their benchmark lending rate for the third time in 6 months, maintained their outlook for one more rate hike in 2017, and set some details about how they intend to shrink their $4.5 trillion balance sheet. In the press conference after the decision was announced, Yellen said the unwinding plan could be put into effect relatively soon if the economy evolves as the central bank expects. Near-term risks to the economic outlook appear roughly balanced. This is a quote now inside the statement today. But the committee is monitoring inflation developments closely, the Federal Reserve Open Market Committee said in a statement. The committee currently expects to begin implementing a balance sheet normalization program this year, provided that the economy evolves broadly as anticipated. Policy makers also issued forecasts showing another three-quarter point rate hikes in 2018, similar to the previous projection in March. The Fed's actions, in words, struck a careful balance between showing resolve to continue tightening in response to the falling unemployment while acknowledging the persistence of unexpectedly low inflation this year. Inflation on a 12-month basis is expected to remain somewhat below 2% in the near term, but stabilize around the committee's 2% objective over the medium term. The committee has previously described inflation as close to its goal. Treasuries rose, the dollar trimmed losses, and U.S. stocks turned lower. The thing that's amazing, folks, okay, so data released, this was data that came out earlier today, so check this number out. Data released this morning showed that a year-over-year basis, the core version of the consumer price index, consumer price inflation, which strips out food and energy, slowed for the fourth straight month to 1.75% in May. Following that news, the probability that the June hike would be followed by another increase this year dropped to 28% from 48%. In a separate statement on Wednesday, the Fed spelled out the details of a plan to allow balance sheet to shrink by gradually rolling off a fixed amount of assets on a monthly basis. The initial cap would be set at $10 billion a month, $6 billion from treasuries, and $4 billion from mortgage-backed securities. The caps will increase every 3 months. Okay, so let's get our head wrapped around this, because this is pretty, they're laying this out. So picture they have $4.5 trillion on their balance sheet. What they're saying here is that when they start, the initial cap, so that means that they wouldn't sell more than, well, the roll-off. And what the roll-off means, folks, is this, is that it means that the bonds and the mortgage-backed securities are expiring anyway. And what they wouldn't be doing is they wouldn't be reinvesting that amount of money. So the roll-off, the initial cap would be set at $10 billion a month, $6 billion from treasuries, $4 billion from mortgage-backed securities. The cap would increase every 3 months by $6 billion for treasuries and $4 billion from mortgage-backed securities until they reach $30 billion and $20 billion respectively. Officials didn't reveal the exact timing of when the process will begin this year, as well as specifically how large the portfolio might be when it's finished. Wednesday's decision brings the Fed target for the federal funds rate, which covers overnight loans between banks, to a range of 1% to 1.25%. The vote was 8-1, with Minneapolis Fed President Neil Kakashi dissenting from the rate increase for the second time this year. Quarterly projections for 2018 and 2019 showed Fed policymakers largely maintained their expected path for borrowing costs. The medium forecast still has the central bank making 3 quarter-point rate increases in 2018. The end of 2019 is seen as 2.9%, a slight change from the 3% in March. It's going to be interesting watching this thing shake out. The recent economic developments prompted the FOMC members to drop their median projection for inflation to 1.6% in 2017 from 1.9%. They also slightly reduced their estimate for the lowest sustainable level of long-run unemployment to 4.6 from 4.7. That's no big deal. Job gains have moderated, but still have been solid on average. This is a quote from them. Since the beginning of the year, and unemployment rate has declined, the FOMC said. Bottom line, next meeting is in 6 weeks, July 25th and 27th through the 27th. And if we take a look at the Fed rate, the probability of a rate rise, what you have is this, is that the next meeting is on the 26th of July, and right now it's at 0. The September meeting, September 20th, the probability is 21% they rise. November is 22, and December is 43. So bottom line, you know, it looks that right now, and this is where it's going to get interesting inside the context, folks, of the dollar and the metals market. And what it is this. So when you look at the probability of where they're going to rise, short-term rates again, we are all the way out to December at 43%. Guess what? It's 5 months away. The market's going to, I suspect, look at this, and we'll see where this shakes out tomorrow. And the reason I'm saying that, if you weren't with us in the first hour, is that what you did have inside the gold market, with the gold market, went from positive $10, $12 to a negative. The dollar index that had been getting crushed for 6 months did reject lower price, but yet still finished in the negative. If we go up and we take a look at the yen, because the yen, no doubt the correlation is pretty direct inside the yen versus the gold market. Bottom line, the yen isn't caught a bid either. The yen got to a low today of $108, 108.83. You're at 109.62. Bottom line, that's still not great. We go take a look at the Nikkei, because when the Nikkei opens up, you'll get some indication of just how the strong yen is affecting the Nikkei. And I expect what you're going to see out here tonight is that the Nikkei was down $15 last night, 19,883. It looks like it's going to go after this lower swing point, which is 19,837. So nothing big. That's $50. What the Nikkei is trying to do is to get back inside its lower range. That's the way that seems to be shaken out at this particular point. We get over and we take a look at some of the high flyers inside the NDX 100. What you're going to see is that there's still sellers out there, big time. You had Google down 257. That's a lot, but that's also a potential ABC structure on the way down. The King, Amazon. Amazon was down 432. You had Microsoft. That was down 38 cents. No big deal there. Facebook was down 43 cents. And Apple. Now, Apple, out of all of those, Apple's in the worst shape. Apple looks like it wants to trade to 130, folks. We're at 145. And Apple would likely will go after this B point tomorrow of an ABC structure, a potential ABC structure on the way down. That B point is at the 142 area. You stay right there, folks. We'll be coming right back. Dow finished up 46, NASDAQ down 25, S&P's off $2.50. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Go over and take a look at this oil market. So you had the EIA numbers come out today. Bottom line, we got plenty of oil. We take a look at this contract. And what you're going to see, we're down $1.73. You did monster volume, folks. We did. So watch this. This is going to be wild watching this thing shake out tomorrow. Well, not monster volume. Yeah, you did. Well, you did 899,000 contracts. So the last low in oil is $44.13. We hit $44.54. You closed at $44.74. This is going to go after this low. If we take a look at oil and we put this on a continuous contract, put this on a weekly for a second. Yeah, we'll see whether we break it. Bottom line, with his game here now is 42 to 39. Let me bring this back a bit. Oh, baby, this is going to be dangerous. Okay, so, yeah, you get 42 to 39 as game. You break that, and that would bring you, yeah, that'll bring you down to the lows of $26. Could you imagine $26 oil again? So we had $26 oil, folks, in February of 2015. Is that 15? Yes, no, 2016. So the bottom line is that this is going to the bottom of its consolidation, and we'll see whether it breaks down. Now, none of us use barrels of oil, but what we do use is gasoline, unleaded. So unleaded today was down 3.9%. That's trading at $1.43 a gallon. That's wholesale. This, we're going to see some nice action at the pumps, folks, because this is a confirmed ABC structure on the way down. You get 175. It's a big one, too. Yeah, you almost get 24 cents, which brings you down to 124. Right now, we're 143. We broke the B point. It ripped it apart, actually. You did 87,000 contracts coming into all of 19. Let me look at this on a continuous. XB1. And see where... Yeah, that makes sense. So this is pretty amazing. So when we did go down in February of 2016, bottom line is that unleaded gas, wholesale unleaded gas, actually hit 89 cents. That's amazing. So you can see what's happening with the announcement that I just talked about when we were talking about the Federal Reserve. It's going to be really tough. Well, actually, they take food and energy out of it. I was going to say that it's going to be really tough to keep those inflation numbers higher, but the inflation numbers they look at, they do keep food and energy out of that. But you know what? This whole inflation deal, I suspect a lot of it has to do with the way that we're all buying things on the internet, and it doesn't take long to figure out what is the least expensive price for the product that you're buying. And I'm not talking about, you don't have to go off product and off brand. You know, if you want X brand, guess what? You're going to find the least expensive price for it. You want separate brand, you're going to do the same thing. And I suspect that's going to be there for quite a while. And the reason being is that we are just getting to the point that that's a normal occurrence, that we're shopping continually on the net. Let's go to Carlos in California. Hey, Carlos, what's going on?
Hey, Tom, how are you?
I'm doing great. How are you doing?
I'm doing okay, Tom.
Did you make it through the day?
Well, actually, I sold early in the morning.
Good for you.
Well, I was upset because I keep seeing the price going up.
Okay.
And I said, "Oh man, how can I sell so early?" Because I wanna like some of the gains.
Yep.
But then I took a walk and I wait for the Federal Reserve to come out and say the statement.
Okay.
And I couldn't believe that it was pulling back, and I ended up buying a couple contracts at a very low. But right now I'm just with my nails right to the edge of my desk because I have the feeling that if we end up breaking this support time, we're going to see lower prices, and I don't know. I don't want to. I feel uncomfortable. That's the truth.
Okay, so let's start with the gold contract. A GC, where do you look at support? What do you figure in support is?
What I was expecting to see as support is 1260.
Okay, and we hit 1259. Okay.
Yes. And
Okay.
I bought me a contract there,
Wow.
and I bought a contract on silver, and I have $100 gain right now. But it's just I never thought it was going to come back. I was honestly a little not a little upset, very upset in the morning when I saw the market.
I think you're going to be. I think I don't know if you heard the conversation.
I did.
Yeah, because that was.
Yes.
We had a great conversation, folks, about metals in the first hour. Because this is going to be. This whole trade's been a tough one. There's no two ways about it, and so it's going to be intriguing watching this overnight.
Yes. Actually, I ended up buying the nugget. I have an order for platinum, but it never came back to 9:30.
Okay.
So it was right there waiting, but it never got activated. But I was surprised seeing the strength of gold and then just drifting down, and I was, wow. Well, Tom, the reason I called is I have a fundamental question for you. It's related to gold. And I was reading an article related to India. They're going to have a tax of 3% on gold bullion.
Yeah.
And it's going to be effective in July 1st. Seems like people in India, because I know an engineer friend of mine that he was telling me that when they announced it, people, they just went crazy buying gold because they want to, in the short term, they want to save for their weddings, and they don't really trust their currency.
Yes.
So they try to buy gold as much as possible.
They do.
They're not like us.
They gold is their wealth, and rightfully so. It's proved over the years, folks, is that they wear their wealth, and they have to wear their wealth because their country keeps ripping them off on a continual basis. And what's amazing is that for the past 35 years, I had a client of mine 35 years ago tell me that, and this is when. So what happened 35 years ago, folks, is that approximately 30 years ago, is that China and India simultaneously were supposedly going to be the new superpowers. Yeah. And this guy said to me, he said, I'm telling you something, I do business in both countries. He says, go with China. It's not going to happen in India because, unfortunately, the government rips their own people off on a continual basis.
Tom, can I hold?
Yeah, stay right there.
Thank you.
And we're going to be right back, folks. Dow Industrials finished up 46, NASDAQ down 25, S&P's off 3.5. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
So we're talking about India. We're talking about specifically gold in India. And India, folks, is one of the largest buyers of gold and always have been. Rightfully so, because what ends up happening is that gold is money, and they've been basically deflating their money for years, hundreds of years, actually. Okay, Carlos.
Okay, and the question I have is the demand of India and what is happening here with our technicals in gold. Do you think that can help our technicals and fundamentals to, at least get a decent rebound, or the ABC structure have changed in any way based on something that we had today? What can you tell me about it?
Okay, cool. So this folks, is a great question. And what happens is this, is that what's happening, Carlos, personally to you, is that you're getting deeper and deeper into the metal market, okay? And this is really cool when this happens, folks, because I've been deep into it, and so let me give you my experience, okay, as to India, China, the buying of gold on a fundamental basis, understanding it, and then the buying and selling on the technical basis, right? So I happen to love the idea, and I haven't watched India for a while, but when I was the first 10, 12 years that I was doing this, I was always cognizant of what they were doing, because they have one of the largest buyers of gold. They happen to know, if you get someone from India, folks, or even plenty of folks that are from India and the United States, they know gold upside down, okay? And it's really cool, because they really understand it, right? And what I never could understand at the beginning, it was like, oh my God. So what we started the conversation off, folks, is that there's a 3% tax that they thought it was going to be a 5% tax that they were going to put in. They're only going to put in a 3% tax. Well, India has always had a premium on the amount of gold that comes into the country. So unfortunately in India, they're always paying more money for their gold anyway, which is a mind blow, because the government has tried every which way to get people off gold so they could probably take the rest of their money, but it's not going to happen because they're too smart. Thank God, okay? So what happens is that I'll put this up as when we were with the break, what I did, I pulled up the article that you're talking about, okay? And so there's two different things that are happening. What happened in May is that India imported 4 times the amount that they did last year. They imported 103 tons of gold. Tons, okay?
Wow.
Now, they did that because of the fact, well, this is what the article is saying, because of the fact that this tax that you were just talking about is going to come into fruition, right? So they thought it was going to be 5%, it's 3%. Bottom line, the next thing would be, so in 2016, they imported 25 tons. Guess what? 2017, 103 tons. So now the real question is going to be, normally at the end of the year also, that they're basically selling a lot of gold, okay, because all the celebrations, people give gold for weddings, okay, all the above, because it's just wealth. I mean, that's the bottom line. This article is saying, okay, will that be less? You don't know. That's the real bottom line. You don't know. Does this, okay, and that was one of your questions, does this make a difference technically? No, it doesn't. But what I always like to see is that when you see a fourfold expansion of demand, which we got in May, that's a good indication that, you know, okay, so that goes out of the way. Now the question's going to be, does China buy more? Does China's central bank buy more? You know, have you ever gone to the Gold Council website, Carlos?
No, I have not.
Okay, cool. So here, I'm going to pull this up for you right now. This, if you want to see, if you want to see some great statistics, folks, right? Now, this is free. You go to gold.org. There's great papers on this website. It's the World Gold Council. They show you the supply and demand curves. And it's a fundamental website, but I've found it really great understanding fundamentally different countries, how much gold they have. What does happen still inside the gold agreement that these countries have is that they only can sell so much gold, and when they do buy gold, they report the buy, you know. So it's a great website, folks, to really understand fundamentally how this market works. And yes.
Yes, go ahead, Tom. I'm sorry.
Well, what you'll get to understand also is that the jewelry market drives gold beyond belief. It's pretty wild, man. I mean, you know, gold jewelry, never mind you and I trading gold and want gold coins and all this stuff. The jewelry market is a big deal. And, you know, when you start putting that together with, you know, the economy doing pretty good, guess what? They're going to be selling more gold jewelry. So
great. Tom.
Yes.
Can I give the phone to my wife, Laura, so she can say hi?
Yeah. What's her name, Laura?
Okay. It's actually Lorena.
Lorena. I'd love to say hi to her.
Okay.
Hi, Tom.
Hi, Lorena. How are you?
Good. How are you doing?
Good. How do you put up with that husband of yours?
I know.
Oh, we love him. I love him. I'm telling you, but
yeah,
you know, this is a tough profession, man. Woman.
It is.
You know.
It is. I'm trying to help him, and I know it is really hard.
It's great. You know, he tells us the stories that you know that even some nights you're staying up with them, and I can imagine you're saying that old Brian character, man. How do you ever get picked up with him?
You sleep a little bit, and I watch, and then I sleep a little bit, and he watches. So yeah, we're doing okay.
Listen, it's a great success story. I mean, I love the story. It's just,
it is.
You know, it really is. It's pretty incredible. And you know, a couple of I don't know if they're your cousins or your friends, they've called in too, and it's so cool just you know, hearing it. It's like pretty wild.
Yeah, it is. But thank you for all the help you gave us.
Well, thank you. And listen, you know, we know. Thank God, some days are better than others. We know that. So.
Oh yes, yes.
You know, I can tell you, this is for everyone. The one thing to keep your eye on all the time, folks, is remember that you're only doing this to try to make some money, to have a good time in life, and it's more important that when you're in trades to have a good time than to make money. That's crucial because your health is the whole deal. And if you, what I've found is that even when you're in a bad situation, let's say you're in a bad deal, if you remember that you got to be alive and kicking and have good health, you'll get out of the deal. And you have to lick your wounds a little, but you'll be all right.
Okay.
Okay,
I
Lorena.
hear the music. Okay, thank you so much.
Okay, have a great one. Have a safe one.
You
Thanks,
too.
Carlos.
Thanks.
Okay.
Bye.
Thank you. Bye-bye. Stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And we go into this market here. Let's go right into the dollar first. So the dollar, folks, got a monster bounce. We got down to a price point today of 96.305. And that's down, by the way, in 6 months from 103. What this baby, I suspect, is still going after is the 95. Let me put this on a continuous contract, 95.905. And the way that we're trading, so here's the number that it has to get over on Friday in order to basically even get a bounce going. It would have to get up and over approximately 96.965. That's only 95 ticks away, so that's nothing to get a bounce going. That being said, I suspect he's still going to get down into this 95.905 area. And the way that we are trading right now, meaning tonight, I don't think this dollar actually is going to get higher tonight. It looks to me like it's going to back down. Now, if that's what we get, if we back down, what you're going to see is that you're going to see the yen get stronger. You know, the yen is what 109.56 right now. Yeah, and this is actually getting stronger as we're speaking. When I first started on the year, the yen was 109.87. This yen also wants to back down. That would be saying that as we're getting through the night, and so remember what ends up happening. I'm off at 5. Futures don't open back up until 6. You get the Asia markets don't open until about 8:30. 8:30, 9 o'clock, that's when you're going to get a real indication as to where the yen wants to go, where the dollar wants to go. And I suspect the dollar's still going to go lower. And what you're going to have out here is that the euro wants to go higher. Because the euro, the way the euro, all of these reverse course in a big way, folks. The euro had gone from a price point when the Fed announcement was out there of 112.89 down to 112.18. That being said, it's already basically, you know, right now you're at it went to 112.11. Right now at 112.18, this thing looks like it wants higher price. So these currencies are going to run things. Now, the correlation inside, of course, the U.S. dollar, this bond market, the bond market has confirmed once again it wants higher price, lower yield. If that's where we're going, guess what? The dollar wants lower price. Because the correlation where the competition comes in now is this. The competition comes in, will the European Central Bank tighten quicker than our own central bank? That's where this is. That's where kind of this has been going for a while. Also, you know, Europe seems to me like it's a mess. But the bottom line is that evidently it's not as bad as you know, I projected that it could be. The euro just went from 103 euros to $1 US in the past 6 months to 112 euro to $1 US. It also broke topside today, and we don't have volume inside the currencies. But I suspect more than likely that is going to be a break with conviction. You get a break with conviction. That's saying the euro wants to run up to the 116 area, because the 116 area is the top of the range that the euro has been in also since March. No, this is from, this is intense. Yeah, from January of 2015. The dollar's been in consolidation since March of 2015, the euro, January 2015. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you, folks. Go have a blast with it. Thanks for being here. Have a great night, safe night. Look for you speaking there right here, 9 o'clock tomorrow morning.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
This is TFNN.